Hi, my name is Nick Glew. I'm president of Marion Economic Development Corporation. We are a community-based economic development group primarily focused on growing companies and growing the community of Marion, Iowa. Today I wanted to spend a few minutes talking about tax increment financing. Each year we know that whether it's during the legislative session or as the tool is used responsibly in the state of Iowa to grow Iowa companies, there oftentimes are misconceptions and a lack of understanding how this tool works. So I want to explain it to you. Let's get underway. So, in the state of Iowa, TIF is used for a couple of primary reasons. First, to address slum and blight, and second, to support economic development projects. Oftentimes, the two will go hand in hand. In our community, utilizing TIF is based on need. Companies must illustrate the funding gap that exists without some type of public assistance and really justify why city participation is warranted and what the benefit of that participation will be to the project. This is the application that we use in our community. I just wanted to illustrate that TIF is nothing automatic here in our community. We underwrite projects very responsively to be able to illustrate to our elected leaders when they consider the use of TIF what the benefit to that project will be. When we talk about TIF, I want to focus on the word increment. In this illustration, let's pretend the left side is just a bare piece of ground that has an assessed value of $200,000. So the owner of that property today is paying property taxes based on a $200,000 valuation. When we consider an improvement made to that site, this is a real example of a project that happened in our community. Let's say after it's complete, the new tax assessed value will be $6.5 million. That means the increment or the new tax base created as a result of this project, the increment, the difference between the two, is $6.3 million. That's an important number to focus on. All incentives related to TIF are based on the increment or the new value generated as a result of the project. Never are we going back and touching revenue from the original $200,000. It's only based on new revenue generated to the community. So that's an important thing. Another thing to understand when we're utilizing TIF is that not all of our tax levies are impacted when TIF is utilized. So for instance, the debt service levies for all taxing entities, schools, city, county, community college, all of them immediately recognize new value when projects are completed, even when TIF's utilized. Also for schools, the physical plant levies are exempt from being impacted by TIF. So if in our community our total tax levy is $38.79, the only portion of the levy that can actually be TIF'd per se is $32.67. You take out those debt service and physical plant levies. So the best way, I think, for us to understand how it works is to use a real example. This is an actual project that happened in our community, but for the purposes of our illustration, we'll reference it as Marion Logistics Company. So this particular company wanted to build a 130,000 square foot building. If you remember back to the increment page, we're going to use the same values. So before the project, the ground they were going to build on was assessed at $200,000. It was estimated afterwards that their new project, when complete, would create a $6.5 million assessment. So after underwriting this project, the community agreed to provide this company with a 5-year 100% TIF not to exceed $880,000. That $880,000 was the gap, the financing gap that was identified with this particular project. So I'm going to show you a model in a couple of minutes, but I want you to be aware of some assumptions that are into this model. First, it assumes that the commercial property tax rollback will remain at 90%. If you're familiar with Iowa property taxes, you know that commercial and industrial properties are they only pay taxes on 90% of their value. Our model is also going to assume that throughout a 10-year period that there's actually no changes to the tax levies. We realize that that probably is not the case, but for the purposes of our model, we're going to keep that flat. We're also going to assume that there's never going to be an increase in the value of the properties, the tax assessed value of these properties over 10 years. We also know that's probably not going to be the case. And our model also will not factor in any non-direct benefits that the company or the state recognizes as a result of the primary investment. So here's our model that we use in our community to illustrate TIF. Pretty complex, pretty confusing. I'm just going to show you this so that you can see that it is a pretty complex calculation. But I want to focus in here on the left side. You can see a couple of the inputs that we use. So in this model, we have to put in the base value. You can see the $200,000. You can see the new assessed value, the $6.5 million. And then you can see after the rollback what the new increment is, that $5.67 million. Earlier when we were talking about increment, I was not factoring in the rollback. This model does. So all of these numbers carry forward to ultimately illustrating this. This is the revenue by year recognized by the various taxing jurisdictions. So the gray column, that represents what this project does as far as revenue is concerned to our local school district. In this case, it's the Linn-Mar Community School District. The orange shows the revenue that this property generates to the municipality, in this case, the city of Marion. And then the blue, I combine all other taxing levies. So our community college, our county, and all those other miscellaneous levies are represented in that blue. So the yellow is representing the tax revenue generated by this project that ultimately is rebated back to the company. So if you do that math, those 5 years of about $185,000, just short of 5 years is actually what it will take to get to that cap. But you can see how total tax revenue, what percentage is rebated back to the company when we talk about 100%. The interesting thing to see here is that we never move backwards in revenue recognized by the various entities in our community. So year zero represents existing conditions, the taxes that are generated based on that ground that sits bare with no project taking place. So you can see it's a very small amount. The school district's about $3,100, the municipality about $2,500 in tax revenue. So in year one, once the project is complete, even with a 100% TIF in place, you can see that our school district immediately recognizes $20,000 in new revenue. And this is a result of the exemption of the debt service and physical plant levy that's in place. Secondly, you can see that the municipality, they get a little bit of bump from $2,500 to $14,500. But again, the majority of the tax revenue is going to that rebate for the first 5 years. When you fast forward to the 6th year, once that TIF is complete, you can see that for the schools, this one project, this one property generates about $102,000 a year in tax revenue. Some rough math, I would guess that's about 1.5 teachers paid for just by one project here in our community. Now, the interesting thing is this project played out a little bit different than we had anticipated. When we use TIF in our community, we usually have a higher expectation of the quality of building that is constructed. So while we estimated this project was going to be $6.5 million and created an incentive around that projected assessment, after the project was complete, it assessed at $9.4 million. So in order to deliver the same amount of incentive, that $880,000, this project was able to do that in about 3.5 years. So the numbers look even larger now. And ultimately, once that TIF period is over, this one project will provide about $147,000 of revenue to our school district on an annual basis. Let's look back at year zero. If we hadn't used TIF, if the project would have not ended up in our community, if we wouldn't have filled that financing gap, that ground could have just continued to sit, producing the minimum amount of tax revenue as illustrated in year zero. I want to illustrate one more scenario. This is an expansion project. We'll call this ABC Manufacturing Company. This was an existing company in a building where they did a 12,000 square foot expansion. You can see a little over $2 million of new capital invested, and then they have some jobs they were going to create. After underwriting this project, the community decided to provide a 5-year 100% TIF, not to exceed $135,000. That was the gap identified. So again, today, $2.8 million. Tomorrow, the assessed value, $3.7 million. When you factor in the rollback, that creates an increment of $781,000. So we produce an incentive based on that $781,000, the new investment. So you can see with this particular project that even with an expansion, we recognize immediate gains in revenue by all taxing entities. It's not as significant of a change when compared to a bare piece of ground, but even with expansions, there's great benefit to all entities. Now with this project, I want to go one step further. Last year we heard and we saw a report that was issued that suggested that TIF costs the state of Iowa money. But I want to address that as it relates to this particular expansion project. So in year one, after this project was complete, the company paid an additional $8,300 in new sales tax to the state of Iowa. So that was additional revenue generated as a result of the project. In year one, there were 7 new jobs created, average salary of $58,000, and the difference because of those jobs in income tax paid to the state of Iowa was a little over $50,000. So total net new revenue to the state as a result of the project was $58,424. You can see that in bullet point 3. Now, several years ago, the state of Iowa agreed to backfill $5.40 to the school districts when the municipalities utilize TIF. So in this particular case, that costs the state $4,220. So the state recognizes $58,000 in new revenue. They pay that backfill of $4,220 back to the schools, still have a significant recognition of new revenue just in year one as a result of this project. Again, we're not considering other indirect impacts. I share this with you because these are the numbers that are a little bit harder to quantify. I was only able to do so because I asked the company to provide me with that data. I believe the state is in a position to also quantify that and realize that the numbers do take work, but I think it's important to make sure we go this extra step as we talk about the true costs of TIF to the state. So our takeaways from this presentation are, when we utilize TIF, there is never a scenario where any taxing entity moves backward in revenue. Even when TIF is utilized at 100% rate, there is always new revenue generated by these capital investments. Rebates are only based on the new assessed value that's created as a result of these projects. These rebates only exist because of the new investment. They are not incentives that the taxing entities have available if the investment doesn't happen. And again, a takeaway is, when we hear that TIF costs the state of Iowa, let's make sure to dig in and really understand all the different revenue sources that the state recognizes when we utilize TIF. So I hope this tool and these illustrations have been beneficial. We've used this quite often in our own community to educate our school board members, our city council members, and other elected officials on what these projects look like when we use the tool in our community. If you have any other questions about TIF, I'd be happy to answer those questions. You can email me at the address on the screen right now. Also, if you have any interest in getting a custom copy of this tool for your own municipality, I'd be happy to visit with you about that, because we can provide it in a way to you that incorporates your own tax levies, models your own unique projects and how you've utilized TIF, and we think it can be powerful for you. So we're committed to using TIF in a responsible way here in our community, and I hope you'll join myself and my other economic development colleagues across the state in promoting how this tool has and will continue to support great projects here in the state of Iowa.